Today we're diving into a topic that's absolutely crucial for everyone, no matter your age or income: financial literacy. We're going to break down the essentials, inspired by the fantastic guide Money Works by Abhijeet Kolapkar. Think of this as your personal roadmap to financial freedom. Ready to take control of your money? Let's get started. So what exactly is financial literacy? It sounds complicated, but it's really just the knowledge and skills to manage your money effectively. It's about understanding how money works so you can make it work for you, not the other way around. This isn't about becoming a Wall Street guru overnight. It's about building a solid foundation, brick by brick, that will support you for the rest of your life. It means knowing how to budget, save, invest, and protect yourself from financial risks. Without these skills, it's like trying to navigate a new city without a map. You'll probably get lost. But with them, you can confidently steer toward your goals, whether that's buying a house, traveling the world, or retiring comfortably. The first and most important step on this journey is financial planning. This is where you create your map. A financial plan isn't just for the wealthy, it's for anyone who wants to achieve their dreams. Start by asking yourself, what do I want to accomplish? Your goals can be short-term, like saving for a new laptop, or long-term, like saving for retirement. Be specific. Instead of, I want to save more, say, I want to save $5,000 for a down payment in 2 years. Once you have your goals, it's time to create a budget. Track your income and expenses for a month. You might be surprised where your money is going. Use an app, a spreadsheet, or just a simple notebook. This isn't about restricting yourself. It's about empowering yourself with information. When you know where your money goes, you can direct it toward what truly matters to you. Now, let's talk about something nobody loves thinking about but everyone needs: insurance. Think of insurance as a financial safety net. Life is unpredictable, and unexpected events like an accident, illness, or property damage can be financially devastating. That's where insurance steps in. Health insurance protects you from massive medical bills. Life insurance provides for your loved ones if you're no longer around. Car and home insurance cover your most valuable assets. It's easy to see insurance as just another bill, but it's actually an investment in your peace of mind. You're paying a small, manageable amount to protect yourself from a potentially catastrophic financial loss. Make sure you understand your policies and have the right amount of coverage for your specific situation. Next up is a big one: debt management. Debt can feel like a heavy weight, but it doesn't have to control your life. The key is to manage it strategically. First, you need to understand the difference between good debt and bad debt. Good debt, like a mortgage or a student loan, is an investment that can increase your net worth or earning potential over time. Bad debt, typically high-interest credit card debt, often funds a lifestyle you can't afford and can spiral out of control. If you have high-interest debt, make a plan to pay it off as quickly as possible. Two popular methods are the snowball method, where you pay off the smallest debts first for quick wins, and the avalanche method, where you tackle the debts with the highest interest rates first to save money. Whichever you choose, be consistent and celebrate your progress along the way. Okay, now for the exciting part: making your money grow through investments. Saving money is great, but because of inflation, the cash sitting in your bank account is actually losing value over time. Investing is how you beat inflation and build real wealth. It's the process of using your money to buy assets that have the potential to generate income or appreciate in value. This might sound intimidating, but it doesn't have to be. You can start small. The most powerful tool you have is time, thanks to the magic of compound interest. That's when your investment earnings start generating their own earnings. The earlier you start, the more time your money has to grow exponentially. Don't wait until you have a lot of money to start investing. Start with what you have now. So, where should you invest? Let's explore some common options, like shares and mutual funds. When you buy a share, you're buying a tiny piece of a company. If the company does well, the value of your share can go up. The stock market is where these shares are bought and sold. It can be volatile, meaning prices go up and down, which is why it's generally considered a long-term investment. If picking individual stocks sounds daunting, mutual funds are a great alternative. A mutual fund is a professionally managed portfolio that pools money from many investors to buy a diversified collection of stocks, bonds, or other assets. This automatically diversifies your investment, which helps spread out your risk. You're not putting all your eggs in one basket. There are funds for every risk tolerance and financial goal, making them a fantastic starting point for new investors. Finally, we need to talk about protecting yourself. As more of our financial lives move online, the risk of financial fraud increases. Scammers are getting smarter, using sophisticated emails, texts, and phone calls to try and trick you out of your hard-earned money. Be skeptical of unsolicited offers that seem too good to be true, because they probably are. Never share your personal information, like passwords, PINs, or bank account details, with anyone. Use strong, unique passwords for your financial accounts and enable two-factor authentication whenever possible. Regularly check your bank and credit card statements for any unauthorized transactions. By staying vigilant and informed, you can build a strong defense against these threats and keep your money safe. And there you have it, a whirlwind tour of financial literacy. We've covered planning, insurance, debt, investing, and protection. Remember, financial literacy is a lifelong journey, not a destination. The goal is to make small, consistent improvements. Start with one thing. Maybe it's creating a budget or opening a small investment account. Every step you take brings you closer to a more secure and prosperous future. You have the power to take control of your financial destiny. Thank you so much for joining me today. I hope you found this guide helpful and feel more empowered to manage your money. If you enjoyed this video and want to learn more, please give it a thumbs up and don't forget to hit that subscribe button and ring the bell so you won't miss our future content. What financial topic should we cover next? Let me know in the comments below. Stay smart, stay safe, and I'll see you in the next video.